Well, g'day there everybody. Thanks a lot for joining me on this Monday afternoon market recap. Before I move into the market indices themselves, let me first begin with the US dollar. It is something that we haven't spoken about in quite some time. However, we have seen quite a definitive move as at the close on Monday. You can see for yourself in the top right hand corner of my screen, the US dollar index closed up 60 cents. Call it what you want. Call it a short squeeze. Call it some form of a breakout. It finally looks as though the US dollar is going to make its way on up into our red rectangular box. If you have been listening to these analysis videos for quite some time, or really any given period of time, you understand that these red rectangular boxes are areas of resistance that we expect either Forex to rally into a market index, an ETF, or an individual stock to actually and eventually slow down and then ultimately reverse in the larger trend direction. What I want you to pay attention to, most importantly on the US dollar index, are these long-term simple moving averages. Also, you can pay attention to the collection, or at least the continuation, of lower highs and also lower lows as this trend continues to progress. So although there is a lot to be excited about in terms of the US dollar strengthening, I still very firmly believe that this is going to be an intermediate move that is ultimately going to take us on up to about 92.06. Hey, we can overshoot this figure, we can move to 93, really as long as we stay below all the way up here, which is sitting at about 94 on the US dollar index. You have to assume that we are going to roll once we get on back on up here and we see these oscillators move back up into overbought readings. Once we do that, that is going to be the opportunity to begin entering into GLD and SLV positions. Obviously, commodities are priced in US dollars. So as the US dollar strengthens, and I'm looking at this potentially strengthening somewhere into May, we're going to see GLD and SLV continue to remain underwater, or at least have significant headwinds. So if I can bring up the right ticker symbol, GLD, this is obviously the chart, the ETF of gold. It closed down just over $1 today. This was after this one particular candlestick over here with this very large upper wick. I believe this was the last time I actually spoke about gold and also silver. And as you can see, we are back within this range. Now, for a very long time, I've spoken about this green rectangular box. Just like I said with the red rectangular box, this is to do with support. So it is essentially a place where X marks the spot. We have horizontal support, we also have a rising trend line, and this is going to coincide with potentially that of a false whipsaw breakdown. Okay, so if we do see this, if we see GLD come on back down to really roughly 122, that's my target. It's looking as though we could hit this relatively soon, especially if the US dollar continues to rise. This could be an absolutely phenomenal position to begin opening up positions not only on GLD but also SLV. I understand, of course, that we have had to sit through again this sort of sideways consolidation. We still haven't seen the defining breakout, but all things considered at this particular juncture, nothing has really changed. However, the US dollar is finally looking to be breaking out of that range-bound type of stagnant environment that we've been in for the past 2 to 3 months. And if that is to occur, you have to assume that GLD and SLV are going to lose value moving forward. But I am still looking at these in a larger and more broader sort of bullish uptrend, which is still underway. You can see for yourself, SLV got absolutely clobbered today, down 46 cents on pretty decent volume as well. This is not an evening star reversal type of pattern. This is not a chart reversal pattern. This is just the suspension gaps playing out with the big moves, the very volatile moves, which we're seeing currently with the US dollar. So everything I said about GLD is applicable to SLV. There is a trade coming. However, it's simply not ready yet. Now, if I move into the market indices, today the markets were under a little bit of pressure. We started actually positive. We then sold off. However, we rallied back towards the end of this session. The closing print was down 14.25 points on the Dow Jones Industrial Average. We don't have a definitive signal, either bearish or bullish. This market can very simply break either of those two directions. I can very easily make the argument that this is some form of a bull flag. However, when I start zooming out to the weekly chart, I can also make the argument that this is a larger sort of bear flag and that we could see the markets come on back down and retest just below this 24,000 pivot very easily. So again, what you need to be considering is the longer term, or at least the larger type of chart pattern, which seems to be that of a larger consolidation between defined support down here at 23,750 and all the way back on up here at 26,500. I am still paying very close attention to these open windows. It's just a matter of, well, is the Dow going to break above 24.9, get above this most recent swing high, which was priced in on Tuesday and Wednesday last week? Or are we going to even potentially come on back down and retest this declining resistance area, which was once the structure of this sort of descending triangle, which appears to have broken out. Now, as I sit down and record this also, I am very, very, very well aware that the oscillators are starting to register that of crosses to the downside. However, I do want to point out that we're not seeing the actual cross from the 50 line. If we were to rally like we have done off from support and we saw the bounce take place, but we started to see the stochastics turn down at the midpoint line, and also the RSI, so to speak, to turn down at the 50, well, then that would be a sign of weakness. What I assume is under construction at the moment, and it really shows this in terms of, I guess, the continuation of the Bollinger Band sort of setup, is that that lower band is turning up, and it appears to be most recently that this top band is also turning down. What this largely sort of denotes is that the market itself could potentially get stuck sideways. We could see sort of a continuation largely of the environment that we saw today as at Monday, where we're just seeing a really, a market which is rather indecisive. I mean, there isn't an upper hand, so to speak, with a whether with demand or supply. We're not seeing the bulls in control, nor are we really seeing the bears in control. We're simply just battling it out around this pivot, falling shy of 24,450. So we're going to have to pay attention to that on the industrial average. We do have bullish trades set up above the break highs, but at the same time, we could see that retest of that support area once again. And also on top of that, we had the S&P last week close this gap. This could be, again, that of a bull flag sort of continuation pattern. It could be a back test of what was once resistance for the sort of late period of March into the early period of April. We could be essentially retesting the pivot at 26.7. However, if we do crack below this level, if we do start to see a breakdown below that 18 simple moving average, which is the midpoint of both the lower and also the top Bollinger Band, it could be a very, very quick ride back down to 2600 on the S&P 500. The same is true for the NASDAQ as well. Now, obviously this week we do have a lot in terms of earnings. Google is very soon to report after the close. It's going to be very interesting to see how this particular stock plays out, whether or not we're going to see the definitive gap to the upside and closure of this most recent gap at 1,131, or if we are potentially going to gap on back down to $1,000 a share. It would be great, so to speak, if we didn't see a gap and really Google was largely unchanged. I simply, however, do not really see that happening. We've transitioned through Goldman Sachs. We've also transitioned through a number of other companies as well. But just to sort of show you these confirmed earnings announcements, we've got Apple, which is reporting on the 1st of May. We have Amazon, which is set to report this week. I believe this is on Thursday, which it is. And again, you can see Amazon is largely doing nothing as at Monday's session, really stuck moving sideways. Boeing Airlines, have a look at this, 17 cents, absolutely stuck in the mud. Wait until earnings. This is scheduled for Wednesday. We also have Baidu, which is a little bit, or actually it's on Thursday, so it's the day following. We have Caterpillar as well, which is set to release on Tuesday. That's going to be very interesting. Obviously, there is some form of a correlation between Caterpillar and the Dow Jones Industrial Average, so I will be paying very close attention to that earnings report. I'll also give you some updates as well, post-earnings announcements. That will begin after the close tomorrow with Google, so check back in and we'll follow along with that. We've got COP pulling back off from those resistance highs. We still have earnings scheduled for Thursday this week. We have CVX as well, which is scheduled for Friday, I believe. Yes, it is Friday, so I will be able to recap this one for you over the weekend. I've spoken about Google. Goldman Sachs has reported. IBM has also reported last week. It looks to be stabilizing, as we spoke about, at about this 144 pivot. If the market does stabilize, and when I say market, I'm talking about the industrial average, S&P, and NASDAQ. If we see this stabilize, we can see this run on up very quickly and to close this window, this very, very large and pronounced sort of window here between 152 all the way back up to 158. So something to keep on your radar as well. Netflix has reported it is pulling back. I love the 342 breakout entry, and we spoke about this over the weekend. Actually, it's the closure of the earnings gap. So this is sort of inverse to EWZ at the moment. As long as we can hold pretty much above the midpoint of this channel, support being down here at 280 and resistance all the way up here at 330, if we can hold somewhere in the midpoint, even if we overshoot this gap a little bit, and then we start to see support show up at these exponential moving averages, most likely the rising 20 exponential moving average. This is going to be a fantastic setup moving forward. It also looks as though we're setting up that of a bull flag continuation once we close this gap. We have a little bit further to go. We got very close to closing it today. However, we still have a couple more pennies left to the downside on Netflix until we definitively close that gap. Now, another stock that I've been paying attention to is Facebook. Facebook, however, does have earnings as well. This is potentially another fantastic trade. If we see this gap to the downside, it gaps to 154, 153, who knows, even 150. And if you start to see white candlesticks down there, down here, this again is all speculative at this particular point. I've got no crystal ball when it comes to the Facebook earnings and how people are going to react to that. It's just simply a hypothetical that if we do see a bearish gap and everyone starts to begin turning bearish on Facebook, this is the perfect location for the continuation of the larger trend. If I zoom out and show you this on the weekly chart, pay attention to this. We've got differing levels of decelerating fan lines. The most recent, or the most relevant fan line, so to speak, is just absolutely exceptional. It is very similar to that Brazilian index fund that I spoke about late last week and that we're paying very close attention to as well. I won't actually recap that today. We didn't see all that much action in it, but something to think about as well when it comes to Facebook, all right? So that's going to do us for this Monday afternoon market recap. If you have any questions, please email me, success@pivotpoint-trading.com. Enjoy your Monday evening, everyone. I will be back with you tomorrow for the beginning of what is going to be most likely a very busy week when it comes to recapping gaps. And also, if I do have any other trade setups that I think are viable for you, whether or not you want to do that in a virtual account or if you're at the point where you are trading real funds, that's all, of course, an autonomous decision for you. But I will have a search and scan for some potentially viable trade options. Just understand, of course, the market might be a little bit volatile with these big tech companies set to announce during the week. All right. So on that note, everyone, I will say farewell to you. All the best. It's James signing off on behalf of Pivot Point Trading. Farewell.